We keep it simple with precision. Welcome to another YouTube video, which is going to be another chart breakdown, of course. So in this video, I'm going to be breaking down GJ. I feel like GJ is like the US 30 of currency pairs, if you get what I mean. But GJ is, well, I say my favorite pair. GJ is my favorite pair, to be honest with you. We have a connection. Okay, so I'm going to be breaking down a quick move I caught towards the end of the week, using supply and demand. Okay, supply and demand is really nice, and the reason I like supply and demand is just because of the RR it provides compared to break and retest support and resistance moves, right? But yeah, let me break down the trade on how I use supply and demand to catch a simple move on GJ, and I believe you guys can, catch moves like that as well if you watch and understand the video. So let's go to the charts. Okay, so this is the move that I caught on Thursday, right? Yeah, Thursday. When did the candle close? Yeah, it's actually Thursday morning, because the candle opened at 9 and closed at 1 a.m. on Thursday. So it was on Thursday morning I caught the move, and I got out yesterday, which was Friday. So let's go. If you have been watching my videos, you would actually notice that I have caught a lot of the moves for this most recent uptrend on GJ. Okay, so you guys should go back and rewatch both the live sessions and the chart breakdown videos, so you can catch some nuggets and catch moves like this yourself. I'm looking at it right now. I remember I did have a live session where I anticipated for GJ to start buying off of this zone all the way at the bottom. And looking at my trading journey, I want to get to the point where when I anticipate for a move like that on the weekly time frame, I would be able to stay in that move all the way to the upside. Okay, but right now I'm not there just yet. I will get there but I'm not there just yet. But for now, let's do this quick chart breakdown using supply and demand. Okay, so I'm going to go onto a clean chart so I can show you the gist. Starting off on daily time frame, of course. Price is clearly going to the upside. Okay, if you don't think it's going to the upside, if you have a different POV, you should re-examine that, because we are clearly in an uptrend. Okay, so first things first, identify direction of market, and then secondly, you get out your zones. Okay, so we get out the horizontal line tool and we start to draw. Let me use the bar replay tool to remove the move I caught. Yeah, okay, so we start to draw up our zones. Okay, next up would be somewhere down here. Okay, and of course, when we're drawing zones, you also have to remember that you have to draw your zones based off of the relevant price action that's happening right now. Okay, so price action is all the way up here. If you're going all the way at the bottom to go and draw a zone, like, come on, that's like far away in comparison to what's happening right now. Okay, so take note of that. So moving on. Okay, so after you draw your zone on daily time frame, the next thing you do is you go down to the 4-hour time frame, so you can see a bit more details of the price action that is happening right now. Okay, so let's go to the 4-hour time frame. Okay, so this is it right here. So basically at the start of the week, right, at the start of last week, I was basically watching GJ to anticipate, like, is price going to reverse to the downside? Like, what exactly are we doing on this pair? So I kept my options open with both buy and sell opportunities, okay, depending on the price action that is going to print. Okay, then on Tuesday there was this huge impulse move. Okay, you can see these 4-hour back-to-back candles. These 4-hour back-to-back candles literally flew to the upside. So at this point, I was like, you know what? I think GJ is going to continue to the upside. But because of how impulsive these moves were, I was not able to catch or get in at this zone, or at the close of this engulfing candle. Instead, I was anticipating for some form of retest to happen. Okay, and that's something we have to remember as traders. Like, even if you miss a move, just remember that the market is still printing. The market is always printing. So keep your options open and, you know, anticipate for a potential move to happen, basically. Okay, so looking at this right here, I was basically anticipating for some form of retest to happen. Okay, so where would the retest happen? The retest could happen back at this daily zone I drew out here, or we could have this demand zone tested again. Okay, so this right here is a demand zone. Now, so for a demand zone, how you draw it is basically the small candle or the bearish candle before the impulsive move to the upside. Okay, so if you look at this right here, these two candles are basically the impulsive moves to the upside. The candle right before, the candle that precedes that, is this particular candle. Okay, now the next thing is, when you want to draw it, you draw it from the wick to the wick. Okay, from the bottom of the wick to the top of the wick. Okay, so let me get out my rectangle. My rectangle tool, get it out. Okay, bottom of the wick to the top of the wick. Okay, and then you label that as your 4-hour demand. Okay, label that as a 4-hour demand zone. Okay, so now we have our area of interest ready. The next thing we need is our entry confirmation. Okay, we don't just fly into the trade, or I don't just fly into my trades just because price does my area of interest, because price could literally just come here, play around, and just like tank. Okay, so I always need the markets to show its hand before I get into the trade. Okay, of course, at this point you just wait and watch. Now, as you see here, okay, I believe you can see it. You see here that we had these huge bearish candles, and then when price started to come into our zone, it started to slow down. Like, you can see that the hugeness basically started to reduce. Okay, so that goes to show you that something is about to happen. Okay, so oops, let me redo that. Okay, so then at the next candle, what do we see here? We see a nice bullish engulfing candle. Why is it a bullish engulfing candle? Because the body of the candle basically engulfs the body of the previous bearish candle. That's a bullish engulfing candle. So you get out your long position tool, you get in, SL beyond the area of fluctuation. Okay, target at the previous zone off of the daily time frame. Now, this is such a beautiful move just because of the RR that it provided. Of course, your first target could be at this previous zone here, right? And then your second target over here. Okay, and the RR is 1 to 3.9, basically 1 to 4 RR. Like, that's beautiful. If you risk 1% of your account, if you're trading a prop firm account, you're gonna make what, 4%? And if you risk 10% of your live account, you're going to make 40%. Like, bro, that is that's money. Okay, but yeah, so at this point we're in the trade. Super clean, super straight to the point. Okay, so at this point we're in the trade and we're not doing anything else. Okay, when you get into a trade, your job is to basically sit on your hands, because you have analyzed, you have anticipated, you got your entry confirmation, you have executed. That's it. Okay, then you wait for your SL or your target to hit. So let's play that to see what it looks like. And price literally just like skyrocketed and never came back to entry again. Like, come on. And you know, it literally just went to the target, to the T. Okay, target hit, straight to the point, simple trade. So that is how you use supply and demand to trade currency pairs. I hope this was super straight to the point. I hope you understood everything that I said. If you have any questions, drop a comment below and I will answer your questions. With that being said, I will see you guys in my next video, of course.